Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
An interesting market, and one that you say is almost a duplicate of what we saw at the same time last year, where the markets were a little wobbly for a couple of weeks, a little minor correction, never quite recovered that, and then a major downturn. Are we seeing the same thing as we saw last fall?
We are. I mean, if you go and you look at the S&P 500 to last September 1st, September 2nd, that was kind of a high that we had, just like we had this September. And then market rolled over and it went into a little three-wave or an ABC correction to the downside, which lasted about 3 weeks. We just had a 3-week ABC correction here this September, so like it's kind of, bar for bar, it's very, very similar. And then we had a little bit of a bounce into the last couple of days of September, which we saw, and now we're reversing back down today. So I think based on what's going on, I think we could be in for some more volatility, some sideways chop, big rotation here. I think we're going to see big percentage swings over the next month. But overall, this is a very similar setup that we saw last year. And even the cycles are the same as what happened at the end of October, actually, of last year. So we're really close potentially to this market finding a bottom. A lot of times, the market looks bearish right now when visually. And typically when it looks bearish, it's in a bull market like we're in, that's usually actually when it starts to reverse. And so we have this very kind of eerie looking chart. A lot of people are fearful today. When you look at what people are thinking and doing in this market, the charts are telling us a lot. We look at the volatility index, the VIX, it's up over 25%. That's a big pop. It was up yesterday already, I think 13%. So it's a pretty big jump in the last 2 days. And that's telling us everyone is pretty fearful. And actually, there's a lot of fear in the market because they're really dumping almost everything today. Stocks are down. Bonds are down sharply. Precious metals are down. Really, the only thing kind of positive today is really just natural gas, which is interesting because natural gas tends to be that one commodity, that one little asset class that seems to buck the trend when there's panic selling in the stock market like we are right now. So it's a pretty interesting week, and it's going to be like this, I think, all week and extend into October.
Natural gas, because no matter what, you have to heat or cool things.
Yeah, exactly. It's used for everything. Energy for cooling and energy for heating. We're seeing such a huge rally. The whole energy crisis has really, overseas, has really started to spark things up, and natural gas has had a massive run. It's got it's got a multi-year cycle low that it put in last year, and now it is putting in what I think is going to be a multi-year cycle high. We've seen this cycle about 4 times in the past. It's like a 4-year, 3.5-year cycle, and usually they end with a big blow-off top with some type of event creating a huge spike. And of course, natural gas has gone from $1.50 to over $6.30 in the past year, just over a year. So a huge move for natural gas. But it definitely has a lot of news pushing it. A lot of people are chasing prices here, and big volume in that commodity right now.
Now, this whole thing with natural gas started when the wind farms in Europe were becalmed, and they had to fire up natural gas and coal-fired plants to make up for that energy, causing a huge boost in energy prices. And the Russians, for some reason, being Russians, I guess, decided they would cut back their natural gas supplies to Europe as well, boosting the price. Would the Europeans really not rather have ships full of Canadian natural gas arrive instead of relying on the Russians?
I would think so. I'd hope so. I mean, it's such a huge. You look overseas, and the price of natural gas over there is just unbelievable. And I think it's still really early in the stages of liquefying natural gas in the big tankers and bringing it over. I think there's a lot of potential for that, and I think it's a pretty slow transition. And not only that, but it's a tanker, so it's going to take forever to get over there. There's going to be a big delay, and I think all that is what's kind of priced into natural gas. Is I think everybody's scrambling, probably trying to get production up, trying to get it over there, and it just naturally it's in the news and everyone's hearing about it, so it's just gonna pull people interested into the energy stocks, into natural gas itself, to get speculative and just try and bet on this news, and so it's got all that attention. That's why it's really spiking here going forward.
Could you see natural gas tankers in the Great Lakes, or are they unsuitable to ship the giant LNG ships? So if Quebec doesn't want to run pipelines, I know they wouldn't mind. What control would they have seeing ships sail by on their way to Europe with natural gas?
Yeah, I'm not sure how that would play out, but I mean, where there's a will, there's a way. If tankers can just cruise on through there, I can't see why they wouldn't. As long as one doesn't turn sideways and jam everything up for months, we'll be good to go.
Well, yeah, shades of the Suez Canal and the shortages caused there. Now, now with this correction happening to the markets and saying it's the same pattern as last year, then how should this be traded?
Yeah, at this point, I mean, the market is very fragile right here. It's very close to having a big correction. The technicals are hanging on by a thread. A lot of sectors are just also hanging on by a thread. So we're really at an important tipping point. But that's usually what it looks like and feels like in this type of price scenario that we're at right now. I have cycles bottoming out this week, which could be very important. We have the similar pattern that we saw last year in September and October. We've got kind of a lot of things coming into play here. We got that panic selling. I think we're going to see this market try to carve out a bottom. And what's interesting is the QQQ, or the NASDAQ, opened dramatically lower today. And when you get a big gap down in the stock market, which most of the indexes gap down, but the NASDAQ was the largest this morning, gaps to the downside tend to be an exhaustion move. And the indexes almost always rally back to fill any gap that was in the chart. So believe it or not, a big gap down in most scenarios, when you're in a bull market like we are, is usually a move of everyone panicking. It's kind of the big last hurrah of everyone just unloading their shares. And then a day or two later, you see the market reverse and just take off to the upside. And it works the same when price gaps dramatically higher. We actually don't want the stock market to gap higher the next day. And I talk about it with subscribers all the time. When we get a big gap open, everyone's excited, but I'm like, hey guys, listen, gaps get filled, which means it's going to open higher and then it's going to sell off for the next day or so to fill that gap. So don't get excited about it, because these gaps to the upside can turn into really nasty reversals and put in a significant top that might last a few weeks. So I'm not a huge fan of price gapping down against us, but big gaps like we're seeing today, big panic, in a lot of cases here turn into be a very important bottom in the market. A few months from now, you look back, you go, wow, I remember that. Everyone was panicking. That was a huge move, big volume, and that happened to be, the bottom. So that's what I'm still looking for going forward at this point.
We'll have more with Chris Vermeulen right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, for the Robin Hooders, the day traders, the people using their phones for trading, what does a situation like this, like we're seeing today, do for them, and do they overly panic or know how to handle something like this?
I would naturally think, if we were to classify those traders as novice traders, people who have only been trading for a year or two, I would think they are panicking today, because most sectors, most of them don't really trade sectors. I would think they trade individual stocks, and that's They're super fast moving. They move big percentages. If a lot of sectors are down 1.5% or 2.5% today, that means most individual stocks are actually going to be down like 3, 4, 5, 6% today. So they're going to be very emotional. You need to follow your trading rules. If whatever trade you're in has fallen below the level that you set in your head, or that you said, hey, if it gets to this level, I'm just going to get out of it and bite the bullet and move on. If it's trading below that level, I mean, technically you should be moving on and closing that trade, because this market, for all we know, the bottom keeps falling out and it turns into another COVID type of crash. You never know where the bottoms are. And that's why when you get stopped out or when something goes against you, you have to make sure you follow through and just move aside. If the market rebounds the very next day and starts to go higher, it's painful to see. But the reality is, if you don't, eventually you're going to lose a huge chunk of your account just because you didn't want to get out of a trade, and you're holding on to a loser that's breaking down. So I think the key is when you're uncertain and things are going against you beyond if it's broken recent support, you really need to move forward, move to cash, and they're trading these high volatility times where I think this market could chop sideways in very wild swings on a daily basis for the next couple of weeks. It's a high risk time to be trading. If you're going to be trading it, small position sizes, try and get a feel for it. They're going to be very quick trades. You'll only be in something for a couple days tops. You move back out. You wait for another extreme, because we're going to just probably see wild swings, big rallies followed by big sell-offs, and they're only going to be 2 or 3 day rallies at a time and 2 or 3 drops. So I think that's going to be more of an aggressive short-term trader's game plan right now.
What's going on with the cryptos in this?
Yeah, well, we're seeing, we're seeing Bitcoin pull back about 3.5%, 4% today. It has a series of bear flags, so it's been trending lower for the past almost a month now, and it is actually still pointing to lower prices. It's pointing to roughly 37,500, which is also going to be a very critical support level on the chart for where it created a bull flag pattern back in July. And also that level is a bear flag pattern, measured move to the downside. So there's two things coming into play here. Based on the drop in the pattern we've seen this month, that's where it should find support. And then if we go back time on the charts and look, it's also a level where it was a very significant pivot zone, or it'll be a support level historically as well, where people will be buying and accumulating at that support level. So I'm bearish on it still. It's under all the key moving averages. It's under the 5-day, the 20-day, the 50-day. They're all sloping down, and really we need to find, it needs to find support, and it needs to build a little base. I think it's got a few weeks of price action to build a new base before I think it's going to start to turn higher and confirm a new technical uptrend.
Now, a few of the people I've talked to say gold will go down if the markets go down, but it might be the first to recover. Your thoughts?
Yeah, I agree. I mean, precious metals, when there's blood in the streets, we tend to see almost everything get liquidated. We see gold crash and sell off. Typically, it doesn't sell as much off as other assets, and it's usually one of the first to recover. It's so I fully agree with that, and I think that's most likely what's going to happen. And as long as this panic stays high in the streets and we continue to see prices slowly grind lower, there's going to be margin calls, there's going to be forced liquidation, and that's what really I think creates a lot of this selling in precious metals in these defensive assets. It's just people forced to close positions, and a lot of people hold gold, and it doesn't take much to move gold or silver. They're pretty darn small markets in reality to everything else. So a little bit of selling does a lot of damage to precious metals.
Chris, so how would you sum up what's happening right now? Be nimble on your toes?
Yeah, I think right now is I'd be keeping an eye on all your positions, find out where recent support levels are, keep your eyes open if those levels are broken, exiting those positions, moving to cash, and letting this market work itself out is the key here. I think trying to hold on to a loser if this market continues to slide could turn into a pretty deadly play. So sometimes cash is king. You're never going to get out at the top. Eventually you do need to get out at some point, and this week could be a good point to get out, cut your losses, and then regroup, because after this correction, there's going to be a new wave of hot stocks or sectors that should be in favor, and usually they kind of change from kind of cycle low to cycle low. So you kind of going to have to rebalance your portfolio anyway when this market firms up and starts a new uptrend.
Chris, thank you so much for chatting with us.
Yeah, thanks for having me on the show, Jim. Always a pleasure.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our guests, you can send them to info@howstreet.com, and we'll ask that question for you the next time we talk to that guest. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.